Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and we're getting an update today from Craig Hemke, founder and editor of tfmetalsreport.com, and we'll put a link to that down below so you can follow along with Craig's research and community. And they are often talking about interesting things that affect the precious metal sector, but also the global macroeconomic environment. And before the call today, Craig, we were talking about it. There's not really a lot on the macroeconomic side that's really changed from last week to this week, but there are some potential flare-ups on the geopolitical side. Obviously, we've seen some conflict in the Middle East that continues to be front and center in people's minds. But I think it's important to note that next week we're going to have the 16th annual BRICS meeting. And this is a lot of the nations of the world that are coming together to discuss the policies initially started by Brazil, Russia, India, China, and South Africa. But they added new members last year: Egypt, Ethiopia, Iran, and the UAE. And there's a lot of other countries putting their hands up saying, hey, we'd like to be part of this new collective as well. And so it ties into currencies, it ties into trade deals, it ties into maybe the de-dollarization movement. What do you make of the upcoming BRICS summit?
Well, hi, Shad. Yeah, that begins next Tuesday, the 22nd in Russia. And a varying list of which countries will be there with their foreign ministers and their finance ministers and the like. There has been this talk over the last couple of years that there would be eventual movement towards some type of common trading currency that these countries can use, an alternative to the dollar. Again, you and I have discussed this in the past. I think the most consequential thing that happened in 2022 was related to the Russian invasion of Ukraine, but it was when the U.S. and the other G7 nations froze all of Russia's outside the non-domestically held foreign currency reserves and kicked them out of the SWIFT system. And that was not only an abrupt thing to happen to Russia that allowed anybody, any country that is just simply, whether right or wrong, thinking they're looking out for their own best interest, they look at that and go, well, wait a second, if our best interests don't align with the U.S., we're going to be economically isolated. And chances are at some point, we're going to not be aligned with everybody all the time. So we better get our act together and have an alternative. And that's what has been discussed in the past at these BRICS meetings. There's been a lot of talk that some type of formal plan, maybe not necessarily a formal actual trading unit announced, but some, hey, we're having these discussions about this kind of stuff. Things that have been leaked or postulated include something that looks like a special drawing right from the IMF, which everybody just uses the term SDR, special drawing right, when they talk about it. And that's from the IMF, that's just a basket of all the fiat currencies, the major fiat currencies currently. This unit, as it's been described, or, some people call it, that might get mentioned next week, is kind of the same thing. It's proposed, at least from what I've seen, it might be 60% of fiat currencies, the ruble, the yuan, you go down the list. But it would also have 40% in gold, just to give it, some heft, give it some gravitas, as they used to like to say, Shad. That's not a remonetization of gold. I haven't seen anything where anybody speculates that like this thing could be converted into gold. But it gives a unit some stability, kind of like a stable coin kind of thing, and allow the countries that might use it in cross-border trade to have confidence in the thing retaining its value if you can back it with some gold. What it does for us as gold investors maybe is just spread the word, hey, wait a second. There's a reason to own gold, isn't there? Because it adds stability and it adds confidence. And that would probably be the biggest takeaway if we do get some kind of announcement next week.
Yeah, it's interesting, Craig, because we've seen a lot of the nations we just named that are part of this BRICS larger community be the central banks that have been buying so much gold that's been underpinning the price, really irregardless of what the technical setup was or what the fundamentals were as far as individual drivers maybe in the US or in China. A lot of these countries, including China, have been buying gold, their central banks, possibly as a lead up to this larger plan of having it as a trading unit that maybe has a partial backing by gold. Do you think that the countries in the West are missing an opportunity to also be shoring up the amount of their balance sheets that central banks hold with gold? Because it looks like this is a movement in the East, and it's not going to be good for nations in the West. Like we were talking about before this, it's Canadian Thanksgiving today. So happy Thanksgiving to all of our listeners in Canada. But Canada doesn't have any gold. And there's a lot of Western nations that have minimized their holdings of gold. Do you think there's a shift going on globally to set up this trade unit where a lot of nations in the West are going to be sorry they haven't been buying gold?
Well, I suppose that's probably true. Yeah, they'd look at it that way. But again, there's kind of the world of tomorrow versus the world of yesterday. And the U.S. and all of its, the G7 trading partners, including Canada, are kind of in the world of, I shouldn't say yesterday at this point, but the world of today and yesterday. This kind of idea that tomorrow will always be like yesterday. Well, it won't. This current system was set up 80 years ago, but it's, to borrow a term from Janet Yellen, it's transitory, this reserve currency status. And the problem is all of the Western nations are tied to that current system, and no one is really looking over the horizon, at least not visibly looking over the horizon, taking steps that you could see. Maybe they are. The Germans repatriate a lot of their gold from New York a decade ago. So maybe there are steps behind the scenes we don't see. But the U.S. certainly is tied to the debt-based monetary system and will do everything they can to continue it, to perpetuate it. Again, this type of competition for the dollar is inevitable. It doesn't mean, if even it's not discussed next week, if you don't even hear anything about, some kind of trading unit, trading currency, it doesn't mean it's not coming someday. And in the end, as you said, it's not just like this binary thing where one day the U.S. dollar has the reserve currency status and all the attendant advantages of that, and then one day it doesn't. It's more of a like death by 1,000 cuts. It's a drawing away of demand for dollars. And a dollar is no different from any other good, widgets, oranges, whatever. If you have an increasing supply of that good at the same time as you are decreasing demand for that good, the price, the value falls. And that's what we're talking about here. Over time, demand for dollars falling because of these alternatives to using it in global trade, at the same time as the supply of dollars is expanding a couple trillion a year. And that just promotes a further decay of the dollar, its purchasing power. And again, that's why we own precious metals in physical form in the first place.
Well, and Greg, it makes me think that this topic for some people is a very tired point of view because we've heard for decades the death of the dollar, the destruction of the dollar. And I think it gets a little hyperbolic when people get into that kind of language. And like you're laying out here, it's not that the dollar is going to be destroyed. It's just like the British pound's not destroyed. It's still there. It's just not the currency that it once was. At one point, the Dutch and the Spanish had the currency, the world reserve currency and the world reserve economic stature, just like the U.S. has today. So it's not like the dollar will stop being used. It's not like the dollar's going away. It's not going to be the death of the dollar. But like you say, death by 1,000 razor blades, it's more of a weakening of its use globally in favor of maybe something like this BRICS unit or some other trading system. And it's not just the SWIFT banking system that was an issue with Russia. It's also been the petrodollar and having to buy oil in dollars. And it looks like even Saudi Arabia and many of the Middle Eastern nations are tired of doing that. They're now trading oil for gold or oil for rubles, oil for yuan. They're trading in other ways. So it really is about global trade and how that changes. Do you think because the West has such a debt-based system that at one point people just don't want to get as invested in the U.S. because we do have a debt problem? We do have debt that's going to be almost untenable soon. And do you think that there is eventually this global reset that people have been clamoring about for decades now?
Well, you talk about de-dollarization for a couple of decades. That global reset idea has been out there too, that at some point the debt just becomes so extreme and growing so at such an exponential rate that the system kind of collapses upon itself. The hard part, again, kind of like this other thing we've been discussing, is the timing of it all. I mean, I can sit here and say, it's history would teach you that an alternative to the dollar is an eventuality. It just doesn't mean it's coming next week. I could go back to when I first started my website 14 years ago and thinking, man, I don't know how we're going to make it to 2012, because the debt at that point was 11, 12, 14 trillion dollars. Here we are 1.5 times that much. And life kind of has continued, without much change. So, but that moment will come. It could come with the next big global recession, in that tax revenues fall off so fast and government spending increases then so fast that it's like Pat Sajak reaching down and giving the wheel a big fast spin, and the whole thing just, starts coming at you that much faster. In the end, though I can't know the timing, I feel very confident, always have, that physical gold and silver will be the thing. Gold in particular, obviously, has such great history, will be the thing that will shelter me and my family and my assets through this storm. It always has. It certainly will in this next iteration of the crisis as well. And there's one more thing, Chad. We might have talked about this last week with Corey, but I remember seeing, I don't know, a month or two ago when spot gold first got to $2,500 for the first time. And there was a kind of a meme on X, Twitter, of a London bar, a 400-ounce, good delivery London bar, the kind that everybody has seen. And how that bar, 400 ounces at $2,500 an ounce, was now worth $1 million. Okay. But somebody put on there, you go back to 1971, you could have bought that thing for $14,400. And if you fast forward 25 years, the late 90s, you could have bought that thing for about $115,000. And so now here we are 25 years later again, and now $1 million. It takes $1 million to buy the same thing. I mean, there are no any adjustments. What do they call those from the CPI? I got stuck on this term last week too, I think.
Heuristic adjustments?
Yeah. Or hedonic adjustments or whatever those things are called. Right. Where, your computer is so much faster, it might be twice as expensive, but it's 5 times faster, so it's theoretically cheaper. Okay, you don't have to make that argument. The bar of gold is the same freaking bar of gold that it was 50 years ago. It just costs you $1 million versus 14,000. And I mean, if anything illustrates the point about the stability of gold and what it can do for you, and while this madness continues, I just thought that was a tremendous illustration of why we own gold in the first place.
Yeah, it's such a solid point. And it's funny because just a couple of years ago, people were putting memes out, Craig, saying that these were just boomer rocks, that they're worthless, that they're antiquated. But these boomer rocks, gold and to a lesser extent silver, have continued to appreciate while the purchasing power of the fiat has collapsed to the point you just made. I mean, if you think about it, when gold used to be pegged at $35, 35 greenbacks for 1 ounce of gold, 1 ounce of gold today is over 2,600 greenbacks. Well, the ounce of gold is on the elemental table. It didn't change. It's still gold. It's still a boomer rock. But what's changed is how many fiat dollars it takes to buy it. And that's true of all currencies around the world. If it was just happening in the U.S., we could say, okay, that's interesting. But every currency on the planet's having the same experience where gold has continued to be buoyed. So it's something where it has been a store of value. But I do wonder, is it at a point here where it's properly valued? Do you think it ever does the big run to 3,000, 5,000, 6,000? Because I remember a couple of years ago, people said if gold goes to 2,000, Craig, you don't want to live in that world. Well, we're way above 2,000 now, and the world hasn't fallen apart. So to your point, could gold keep appreciating without the world falling apart?
Oh, for sure. Yeah, it's also like, the people that say, well, if the banks manipulate the price, how come it's gone from 400 to 2,500 over the last 20 years? It, of course, can go up, and it will continue to go up despite, best efforts to massage the perception of why it's going up. Again, it's not something, and I always caution against this, and I always have. No one should put all their money into any particular asset or asset class, right? You have a diversified portfolio because as you wait for the remonetization of gold or the world figuring out that there's derivatives of gold, there's far more derivatives of gold than there are the real thing. As you wait for that kind of revaluation and adjustment, well, there's an opportunity cost, right? Of what you could have, had some money in some other things that might keep up, that might outpace inflation over time. But boy, if anything is proven over the millennia, that its value, its worth, what it does for protection against crises, and certainly a lot of those going around these days, Shad, it's physical gold. We don't want to confuse it with the mining shares. There are always going to be opportunities for companies that can go find it and then get it out of the ground. And if you can pick the right one, you can make a lot of fiat cash. But the anchor of everything, to me, has always been physical gold, and that's always been the main part of our work at TF Metals Report, and that's why we continue to do it, because nothing has changed in that regard.
Well, Craig, one more thing, I guess, just as we look ahead on the geopolitical and political side, this is the upcoming U.S. elections front and center. It's about a month away now. Obviously, there's tension on both sides, and without diving into the red and the blue side of it, just there's different economic plans from both administrations. There's different trade ideas. There's different tariff ideas and strategies. Do you think that we're in the kind of the lull before the storm here, where people are waiting to see how that plays out before maybe the general equity markets and maybe the commodity sector and the world knows what direction things are going? Do you think that there is a strong outcome from either side winning that would change things on an economic basis?
No, I don't. I don't know if that's just cynicism of an old man or if it's the realism of someone who has seen all this and paid close attention to it over the years. And you just begin to go, yeah, nothing's ever going to change. Even in the one debate that Trump and Harris had, the word debt or deficit didn't come up once. Never came up once. So I don't see where either party, whichever one wins, is going to do much about it. And as we get into next year, get a new Congress in January and they all go to work. I mean, it's going to be a mess for the U.S. government to try to make its way through this. Now, this is outside of recession and anything else that might come next year. But there are the individual provisions of the Tax Cut Act that was a couple of years ago that are set to expire. There are income limits for Obamacare that are going to end. There are spending caps that were put in place with the last debt limit deal that are going to go away. I mean, there are all kinds of fiscal issues that the U.S. is going to have to face, and nobody's talking about it. And they're talking instead, about just nonsense on the fringes to try to garner a few extra votes. So to me, yeah, it's a mess. It is a calamity. It is out of control, regardless of who wins the election, because I've not seen either side put forth any kind of plan to try to get things under control.
Yeah, and the odds are whoever side wins is still going to spend a lot of money fiscally, and they're going to juice things with more spending. Every administration throughout time has spent more than the previous administration. I don't know what it'll be for or what drama or crisis will require it, but they're going to spend more money, which accelerates the money supply, and it makes the fiat money worth even less. So it really doesn't matter who wins. I just wondered if you thought there was any trade or ideas as far as how global trade would work that kind of ties into the initial thought we had with the BRICS meeting. Is there any alliances that you think would be better under a Harris or a Trump administration?
It's hard to say. You think back to the previous Trump administration and some of the policies that they had, everything. Do you remember it almost seemed like the stock market algorithms were programmed to read every time there's a headline about Chinese tariffs? Remember that back in about 2017? Oh, trade war, and the stocks would go down. And then, oh, no, there's not going to be a trade war, and stocks would go on. So, we might get into some of that again. It's going to be such a tumultuous next couple of years, both politically and geopolitically, Shad, that to try to predict it, I think it's almost like a game theory kind of chaos thing, right? Because you don't know what one policy will impact this, and then how that might impact, something after that. And without making it seem like it's a gross oversimplification, I'm just going to keep buying gold because the math is the math. That's the one thing I know for certain. The math and the exponential growth of the debt and the interest on the debt will make my gold more valuable, regardless of who's running the show.
Well, Craig, that's a great way to wrap it up for today, and that's a great point. It really doesn't matter who wins. We know that they'll spend more money. We know that gold will become more valuable over time, and it doesn't need to be doom and gloom or that the world's falling apart. It's just a better store of value for the longer term. So definitely we'll leave it with that thought for listeners. And if people want to get more of Craig's thoughts and join the community, definitely click on the link to tfmetalsreport.com underneath this interview. It takes you over to Craig's site so you can join into the mix. And Craig, looking forward to our next conversation.
Always fun, Shad. Have a great week.